Appreciate it. And thanks, Vicky. Thank you very much. So today we're going to talk about finding reversals without indicators. In today's session, we're going to share several, at least 3 simple naked reversal systems, but I'm hoping that we can get to all 5 of them if possible. Hey, Tariq. Thanks, guys. So welcome and thanks for spending time here today. I really appreciate it, and thanks to those of you watching the recording. So, my name is Walter. Trading currencies since 2000, and did a psychology degree, a doctorate in psychology, and I use a simple approach. You may have read the book Naked Forex. If you haven't, doesn't matter. We're going to show you some naked stuff today. I would encourage you to test this stuff in a simulator, see what works for you. Obviously, we don't all see the markets the same way. Otherwise, we'd all be in the same trades, right? So what I hope to get across is that you don't have to use AI or, any sort of fancy schmancy EA or anything. You can actually just use your brain and you can get into some pretty fancy trades. And that's what we're going to try and do here today. Now, these reversals are usually the most popular types of trades. What I found, and I've tested and sent a specific test to traders around the world, what I found is that most traders prefer to take reversal trades. Fewer traders, about 15 to 20% of the traders out there, will take trend continuation patterns. Now, what I'm going to share with you today, these sorts of patterns can be used as trend continuation. It's just you have to zoom in on the chart and see the reversal as a reversal of the retracement move, if that makes any sense. If it doesn't, that's okay. We're going to get into some charts. So let's see here what we can do. I am here on the Euro chart. Okay, so let's talk about this one right here. All right, so one of the principles that I like to use with reversals is that it's really when you like what I found in my testing, when you have a naked a forex pattern, sometimes the market won't necessarily give you what you're looking for unless you make sure of 2 things. And thing number 1 is that it happens in a really good spot on the chart, which is like a support and resistance area. Thing number 2 is that you have to pay attention to what's going on around the signal. It's not just the signal itself. So I want support and resistance, and I want a supporting candles around the actual signal. Okay, so for example, right here, you'll notice if you go back in time here, you'll notice a couple of things. This is the Euro yen 1 hour chart. Doesn't really matter the chart; they're all the same. In fact, one of our forum members, he was talking about the DAX and the Hang Seng this week, and in both cases, we're able to use a very simple naked pattern to suggest that they were both going to break out. So it's this kind of stuff. You'll see it all over the chart. So right here, you saw a resistance touch right here, and then you saw a support touch on the other side. This is what we call a pinch. This is very common, but this is a trend continuation pattern. We're not going to talk about this. We're going to talk about this over here, which is the first time the market came back to this level where it bounced and then broke out and pinched right here. So on this chart, this is the 122.89 level, and you can see the market came down here. It was making lower lows, lower highs, bearish flags all the way down until finally it came down here, and it actually printed a little tiny engulfing candle, it looks like. The market went away from that, came back down again, and then printed this big bullish candle, which was not a bullish big shadow. We can talk about those in a minute, but rather it was a higher low. Okay, so The first pattern I want to share with you is called the whammy pattern. Now, this is a bullish pattern. It's a bullish reversal, and the rule follows. These rules are also, and plenty of examples are in the Naked Forex book, but a whammy looks like this. So you've got the first touch is lower. So first touch is the lowest touch on the support and resistance zone. The other thing to keep in mind is that the second touch is higher. This is always the case. It's the higher touch. I shouldn't say the lowest. I should say the lower, isn't it? Lower is actually proper English. Lowest would be if there were more than two. But there aren't more than two. There's just two. So the lower touch is the first touch, which is this one. And the higher touch is here. So you can think of this as like a special case double bottom. It has some rules that you don't necessarily see with generic double bottoms. So the other thing I want to point out here is that the signal candle is a big bullish candle. Okay? And there's really two common ways that you're going to see a big bullish candle. One is you see exactly what we saw here, which was this. Blammo. And the second thing that you would see would be, or the second type of bullish candle would be a long tail. So a really long tail that suggests that there's been a lot of rejection there. That would be another one. So a really long tail. So usually they're going to be some sort of big giant candle or a long tail. Okay, so question is, there's only 3 candles between them though. Wouldn't this be a sign that it isn't a whammy if you're trading the 1 hour? Possibly, yeah. That's a fair assessment for sure. So it is ideal to have more than just a couple of candles. If that were the case, you would certainly be able to switch to the 30-minute though, right? So here's the same chart where we've come down here, and I want you to notice something, that on the recent lows, you've seen some long wicks, a long wicks here, long wick there, a little bit of a wick there. This is the big touch. Then the market goes up. We kangaroo tail up against these highs up here, and then we come back down. And so the signal candle in this case would be this candle right here. Okay, and that is definitely a fair assessment. The zone is still going to be the same. In fact, my friends that trade the lower time frames, I don't for a whole number of reasons, but those traders typically will find strong daily support and resistance levels, and they'll trade their 5-minute charts off those daily support resistance levels. The same thing here. We've got a really nice zone here, and especially on the 4-hour. So you can see your touch here. This is lower than the second touch. The lowest low over here is 122.86. The lowest low over here is 122.84. So it is indeed a higher low. And then you get the bullish candle here. Then I put a buy stop above my signal candle. What I typically do is, well, I'll be trading the higher time frames. I don't trade the 30-minute charts, but I wanted to show you guys I want to show you a bunch of different charts, a bunch of different time frames, so you can see these patterns are across the board. But basically, six pips plus the spread for a buy trade. If it's a sell trade, I would do, and this is only like for 12-hour, 8-hour. Maybe if I'm trading the 6-hour or the 4-hour, I might only put 4 pips above or 5 pips above. But on the daily or whatever, I definitely put like 6 pips. If I'm trading a pair like the pound CAD or the euro, New Zealand, or some volatile pair like the pound yen, I'll probably use 10 pips plus the spread. You always add the spread for your buy trades, and you would not need to do that for a sell trade. Above high. So the signal candle, the entry, I use a buy stop above the high. Why would you use a buy stop? Who here has the answer to that? Why on earth would you use a buy stop? Why? Why? What does a buy stop help with? Like, what can you possibly do with a buy stop? Yeah, exactly, David. David says it's morning, Hisham. Uh, yeah, so it's a greater probability trade. When you use a buy stop, you avoid all of the worst trades there are. You're always going to avoid the worst trades when you take a buy stop. When you take a sell stop below the low or a buy stop above the high, you always avoid the terrible trades. That is going to be the case always. Okay? That's just going to be the case. All right. Now what I want to do, guys, is I want to share with you what's just happened, actually. So we had this zone over here where we have multiple touches. We had the floor kind of when the market rocketed up here and it kind of consolidated up here. This was the floor. Then we had 1, 2, 3 touches with the kangaroo tail, which is in itself a reversal, although this is not a very good one because it's the third touch in quick succession. I would not trade that one. I would be scared that it was going to break out and go higher. It didn't, but I would be very worried about that one. Then we had the fourth touch here, and then we didn't touch it until just recently, just today, in fact. Now I want to share with you why this is a signal right here. This is very different to the whammy. Now, for the whammy rules, you can reverse these rules for sell trades, and that would be a moolah. So a moolah is the special case double top, and the whammy is the special case double bottom. Now I want to talk about something completely different, and this is what's called the ghost peak. So it's good to have a bearish example here because we have it right now. It's just happened today. So this is a ghost peak, and the ghost peak has a couple of interesting characteristics. It's perk, not the ghost perk. No, that's not what we're looking at here. And there we go. So what happens with the ghost peak is, again, similar to the whammy and moolah. It's a double top. You've got a touch here, and you've got another touch here. Again, you could probably make the case that, hey, Walter, these happen pretty quickly. Ideally, they would have about 5 or 6 to 15 candles, 6 to 15 candles between them. We have 1, 2, 3, 4. We have 4. So it's a little bit quick. And that can be a problem, right? It's not ideal. So some traders wouldn't take it because there aren't enough candles between them. However, if we went to the half hour chart, you would see this is a bit scary too, actually. The reason why I say that is see how we have all of these candles kind of right up against 1, 2, 3 candles right up against this level. That's not a good sign. That is not a good sign. What is a good sign is this move up here with the higher wick. So with the ghost peak, what you get, let me back this up. With a ghost peak, what you have is you have the first touch has a higher close, but a lower high. Okay. Now this, it might just take a second just to wrap your head around this if you're not familiar with this concept. But the second one, and then second touch, actually has the opposite. It has a lower close, but a higher high. Okay. So let's talk about what this is saying. We're saying that the market has run up again. It's been going up, which is true. It's been going up here for a while. And then it runs into a support resistance level. And what does it do? On the first attempt, it closes, and this may not be the case for this 30-minute chart, but it is indeed the case for the 1 hour. So we'll make sure that we're on the 1 hour while I'm explaining this to make sure that everyone's on the same page. So the market's been going up. It's been doing really bullish things like this bullish trendy kangaroo tail. It cleared this high over here easily and settled on top of it. Did another bullish trendy kangaroo tail, although there's a bit of a gap there. It's fallen down, but just totally accelerated, consolidated, accelerated out of that, then went bam, then came back down and went bam again. What's interesting about this is that the first touch has a higher close, so it's right up against the resistance level. The second touch, but it doesn't go really far into the zone. The second time, it goes deeper into the zone, but guess what? It cannot close above the higher close. What does that tell us? It tells us the sellers have won. They have won because the buyers got the market to close here at 124.43. But the buyers could only get it to close right here at 124.39. They could not get it to close any higher. Even though they shoved it up there, the sellers rejected it and sent it right back down with a nice long wick. This is beautiful. And the way that I get in these trades, it's actually a little bit more aggressive than the old whammy or moolah. I actually get in on the close of this candle, of this signal candle. So this candle right here, once the market did this is the signal candle. The market has decided to go higher. It's taken out the previous high, but it hasn't been able to close above that previous close. This is the entry right here. This is the entry right here at 124.34. And I actually will put my stop loss above this high. But if the market comes up here and is able to, and the reason why I do that is because sometimes it'll actually stab a little bit more. You don't really know if you've reached the ultimate reversal candle. So sometimes it'll stab a little bit higher. So like in the case of this one, if I'm going to sell here, and I didn't, but if I would have, it would have been 124.26. Okay, selling on the close of the candle. Sorry, 124.34, which is the close of the candle. Okay, so we'll just put this in. So blue is my entry price. And then my stop loss would actually go well above the high here. The high on this candle is 51, so maybe like 65 or something. I'd put it up there. 124.65 is my stop loss. And then, so what is that? The 65 is 31. Is that right? 31 pips of risk on a 1 hour euro yen chart. And then if the market comes back up here and is able to close on the time frame that I'm trading on, if it's able to close above the previous close, then the trade is over, even if it doesn't hit my stop. Usually that's a sign that you're going to see it's going to make higher highs and you might as well pull the plug. That's how I trade it. Okay, does that make sense? Any questions about the Ghost Peak? Obviously, you can reverse these rules for the Ghost Valley. It's exactly the same thing. You'd get a lower low on the second touch, but it is a higher close, right? Just like the second touch here is a higher high with a lower close. So you can reverse those rules and do the bearish case as well. Those Ghost Valleys are similar to the Ghost Peaks, just like the whammies and the moolahs are similar as well. All right, so we've covered two here. What I want to do is talk about a couple of ways that you can, and what's nice about this sort of entry is that, you can get in pretty close to the top if you hook it in right. And so you really want to ride, like in this case, I would probably ride this all the way down to here at least, where these lows are right here in this area, probably down to 123.70, 123.75 around, something like that. That would be, the kind of trade I'd be looking for here. But yeah, so that's essentially what a Ghost Peak and a Ghost Valley is. Now, we can also take simple kangaroo tails. And what I want to do though is give you like a high probability or high reward risk ratio tool for this. So if you're going to take kangaroo tails, let's see if we can find some. I'm on the, there's another moolah right there. Does everyone see that? So here's your first high, here's your second high right there. And actually that would be right up against this level here where we had the floor was right here. That was the floor over here. Kind of touched it right there, and then it double touched right there. That was a moolah top right there. See, touch there, touch, 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 and then bam right there, double top. But let's try and find kangaroo tail, because what I want to do is show you a really cool way to actually, this one's nice because this is both a ghost valley and a kangaroo tail. So that's cool. Love it when you get lots of stuff like that all sort of lining up. Now we're going to assume that this is on a level. I'm not sure that it actually is, but we'll assume that this is on a level and that going back in time we had reason to suspect a reversal here. I'm not actually sure that that's the case, but could be. Okay. So, what we're going to do here is we're going to take a trade like this. All right. So I'm going to zoom in. June this is. So the market's been falling, and I'm like a typical trader. I like to take reversals. So I decide that I am going to wait for it to hit my level. Boom, goes up, comes back down, and it gives me a long-tailed kangaroo tail. So this actually has the lowest close is right here on this candle on the 4-hour CAD. So we have the loonie lowest close is 133.77, and then the lowest close here is 133.86. So definitely a lower close here on this little inside candle. It goes up for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and then boom, it gives me a beautiful signal with a lovely, this is what we were talking about before with whammies and mullahs. This is beautiful. This is not a whammy, though, by the way. This is actually a ghost valley, and it gives just a beautiful looking kangaroo tail. Now, I want you to focus in on the candle next to the kangaroo tail, because this is really important. The way that you can improve your reward to risk ratio, it will not improve your win rate, by the way. This will reduce your win rate. However, you might find that it actually pulls more profits depending on how you trade it. So look at the low here. See how this has a low at 1.3379 on the candle before our signal candle? Again, this is the signal candle. This kangaroo tail here is clearly the signal candle. You cannot get any more clear than that. And then this candle has a low of 1.3379. So what I can do is I can put a buy limit for the market to go not all the way down to 79, but maybe like 83 or something like that. And I'm not sure where it went. It went to 97. So it didn't actually go low enough, unfortunately. And I would have missed this trade using that. But you can in some platforms you can do one cancels the other. So a case where like if the market hits your buy limit, it cancels your buy stop above the high, and vice versa. If it hits your buy stop above the kangaroo tail high, then it cancels out your buy limit. So you can do that in case you're worried about missing out on a trade. But this is a really lovely kangaroo tail. And the way to get into these with a nice reward to risk ratio is to use a leg entry where you guesstimate how far it will retrace against that kangaroo tail by using the leg to the left of it. Does that make sense? Am I speaking English here? Does everyone understand? I mean, is that I'm trying to be as clear as possible, but I don't want to I don't want it to be too weird. Here's another one. This is a big shadow, obviously. If you add these two together, you get a kangaroo tail. Well, actually, maybe it's a kangaroo tail. It's going to be borderline because you'd have an open here and a close there. But this is, again, special case of the engulfing candle where you get a higher high, a lower low. It's the biggest candle you've seen in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's the biggest candle on the last 11. So that's a good sign. And then again, like if I was looking for an entry here, I might look over to this candle here or this candle here and say, all right, this candle actually stabbed into this 2 candle formation as far as here. What if I put a buy order, or sorry, a sell limit up around here? Again, you would have just missed it here, but a lot of times what you'll notice is that it's a little bit more symmetrical than this, and that second move will also go right into that same area here. Let me see if I can find a really good kangaroo tail for you and see if it doesn't give us a leg entry. You know what? We could actually just go to the live charts. Let's do that. All right. So here, okay. So what's happening here is this looks like a trend continuation pattern. So what we have is like something along these lines where you will often see this will tighten up here and then it'll fall, right? So that's probably not the best look for a kangaroo tail. Let's go to the, actually, let's go to the pound. Pound, or maybe, let's go to the pound yen. Let's go to the pound yen and see if we can find a little mini kangaroo tail on our lower time frame chart. Indeed. No, we've got some bearish action. All right, so if I looked at the 4-hour chart here and I said, and I had a question, my question was, okay, where does the support come in? Well, it looks like the support's going to come in probably about right about here. We had a floor over here. We had a pinch right here with a double top pinch. And then we had touch. There's a pinch right there. And then we had a lot of tops right there. So I would be looking for the floor to come in around 138.30, which is pretty far away from where we are. Yeah, this is not a good one for a reversal. Not a good one for a reversal where we're at right now. Here is a, it's a bit messy. I don't want to go to the 5-minute chart. It's too messy. There's a lot of ugly, yeah. Let me find a nice, oh, here's one. So this one gives you a really nice entry. This is both a pinch, it's a reversal of a counter trend move. So the market's been going down. Okay, so that's clear, right? Market's been going down. Boom, boom, boom. It comes down here. It breaks through your level, kind of makes a mini pinch, then comes back up, hits it once with the big shadow, hits it twice with the kangaroo tail. So now the question becomes, this is September 10th, it looks like. The question becomes, well, what do I do? What do I do now that the market has come all the way down here and hit it again? Well, I can use a leg entry and I can put a sell limit around the high of this previous candle. I don't know what it's going to look like to the right, obviously, but I do know what it looks like to the left. So if this has a high around 138.14, I can put a 138.14 sell limit. And guess what? I do get triggered in this case on this candle. It goes all the way to the zone again and then finally falls. So my stop loss, which is clearly above the high here, I got to add the spread, right? It's above the high here. I withstand that pullback, no problem. And then boom, it falls all the way down to, it stops kind of right here around this floor, and then it keeps going, which is awesome. So that is a great example of how the leg entry can get you in. What's nice about that, it just gives you way higher reward risk ratio, because I get in, let's say here at 11, my stop loss is 30 pips away, or 30, we'll call it, 30 pips away. So if I take profit down here, I'm risking 30 pips to make 130. That's pretty good, right? Whereas the standard kangaroo tail, I'm risking approximately 45 pips to make 112. So 45 pips to make 112 or 30 pips to make 130. See, that's the difference. That is the difference of the leg entry. Hopefully that makes sense. Big shadow, we've covered this in other webinars. I think I showed you one. Big shadow again, you see the market run up against a zone and then it throws that special case engulfing candle, higher high, lower low, biggest candle you've seen in the last 6 candles. And then it takes out the low and will trigger your buy stop within 2 candles, basically. So it's just a special case of the engulfing candle. Probably my favorite trade too, because they're everywhere and they're easy to see, they're easy to spot, and they're really good fun. Let's see if we can do a. What I want to do is look at the Aussie Kiwi. Let's see what this is looking like here on the 4-hour. Yeah, not so much. So some people would look at this and go, "Hey, isn't this like a double bottom or something?" No, this is not. Now, if it did a little kind of a little like teacup sort of thing here, that would be good. That would be a really good sign that we made a low, a lower low, and then a higher low, and that would be potentially a reversal. But there's a big shadow. That also happens to be a belt, but that is a big shadow right there. Does everybody see that? So here's another simple reversal. Again, you have a higher high, a lower low. It's the biggest candle you've seen in 1, 2, 3, 4, 5, 6, 7, 8. Probably bigger than this one, but maybe not. Certainly this one's bigger. So it's the biggest candle we've seen in a while. And the very next candle trades lower, which is a good sign. Pulls back a bit into there and then falls and goes. This is another big shadow, but this is not a reversal. This would be a trend continuation big shadow where it engulfs 1, 2, 3, 4, 5, 6 candles. Almost 7. All right. Okay. I want to talk about one more because this one's kind of hard to see. But one bottom that you will see and one top that you will see is the saucer. So this is kind of that look right here. So you kind of, what ends up happening is you kind of have this sort of this really gentle belly on the bottom. So it's not really a box. It's more of a, let's see if I can find another one for you. If anyone is familiar with the old book, which got me into trading in, I can't remember when, 91, 92, 91, 92, was by William J. O'Neill, and How to Make Money Trading Stocks. And he talked about the saucer. And so what we were looking for with our stocks, we were looking for these where the market would come down and then make a saucer where it would go like this, a teacup, he called it. It was like a teacup like this, and then it had a little handle there, and then you would buy when it went higher than the handle. So this is exactly what he was talking about right here. So here's your saucer, little teacup. Here's your little handle, and then as soon as it takes out that handle, boom, you're in right there, and you ride it. Now he also talked about relative strength and earnings per share and all that, but that was his basic idea. And what you'll find is that it sometimes makes tops too. You'll see this at tops, where the market will kind of make this rounded top like this, come down, make the little reverse handle like it did here, and then fall. So this one takes a little bit of time to see, but this is a good one. There's your saucer or your UFO or whatever you want to call it. Comes up like that, comes back down, and then it gets a little handle, and then boom, you go. The handle is key because that kind of tells you that the move is over. Possibly you could see one here too with this. There's a little bit of a little jig right here that's not ideal, but this little, and then you get the, and then it goes. So let's see here if you can see it, but it's like, and then it goes. Yeah. What else? Any other questiones? Any charts that you want to see? Actually, before we go, we should talk about the live charts. So if there are any live charts that you guys want to have a look at, we can. So there we go. We've talked about the moolah and the whammy, talked about ghost peaks, ghost valleys, kangaroo tails with the leg entry for a higher risk reward. We talked about the big shadow, special case engulfing, and we've talked about saucers and UFOs, which are sort of rounded signs that the move is over. That bottoming out. So the key here is when you want to bottom, you want to see the market going lower, 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 and it makes the bottom like this little saucer. Here's your little handle right here. Boom, and you go long. Okay, great question from David. David, give me a chart. Give me a time frame. Give me a chart and a time frame. We'll do it right now. I'll show you exactly how I do it. This is a really good question because the biggest thing that people have. So David's question is, how do I draw support and resistance? Is something that I've had troubles with, and I'll show you the easiest way. And once you see this, trust me, you're gonna like. Okay, cool. Let's do it. Pound New Zealand 1 hour. Okay, this is what I do. I go new chart. My pound New Zealand. Pound New Zealand is right here. I go 4 hour, and I'm gonna go like this. Okay. So I'm going to back it up. So you want the 1 hour support and resistance? This is what I would do. I go like this. This is exactly how I do it. I go boom. I go to the line chart. I find all my zones. The key is that most traders will draw too many zones. So it gets confusing and you think every other candle, the market hits a zone. If every other candle, the market's hitting a zone, or if you see your candles actually straddle zones and go from one zone to the other, you know immediately you have too many zones on the chart. All right. That's a huge, huge clue. The disadvantage of doing the zones this way is that you have to wait, and some traders are not patient. What I found though, that patience is the way to go, and that the more patient I am, the better my trades. If I get impatient, I often start running into bad losing streaks. And you may find the same. I'm not sure, but here's what I'll say. All right, so I've drawn all the zones based on the bends on the line chart. Does everyone see why this is resistance, this is support, this is resistance, this is support, resistance? Magic how the market has a memory, months and months later. But I've drawn all my levels here. Now, obviously, I might have to slightly adjust it or something based on closes, but basically, we're right on support right now on the pound New Zealand 4 hour. So now I go to the 1 hour, and the only thing I'll do here is if there's something that I clearly missed, and I made a really bad mistake, then I'll draw it in here. But I think a lot of these are pretty good. So I'm not going to be too concerned about this. Again, the only real thing here would be maybe, adjusting it a little bit or something like that. Otherwise, you're going to be pretty solid using that line chart. Okay, so now let me fast forward to the future, to now. And you can see here what we are doing is we've touched this 1, 2 touches here and a third touch on the pound New Zealand. And I will say that I have a bearish bias on this pair because the open position ratio suggests so. So I would, for me, I would expect that it's going to break. It's going to break this support level here. And again, like I said, maybe it's not 91.10. Maybe it's actually better drawn at 90.98 or whatever. But, you get the idea. And so I think with all of these, 3 of these touches, 1, 2, 3 in quick succession, I think we're actually going to fall through the floor here. I think it's going to break and go lower, but this is exactly how I would draw my levels. And so probably the most likely trade that I would take here would be some sort of breakout pattern right on the support and resistance level, or if the market on the pound New Zealand were to break lower, I drew the wrong, hold on, let me delete that. I don't want a trend line. I want the, whatever. I want it would break lower and then it would come back up and touch this and then go back down. I don't want the, I've got the wrong tool on here. Problem is I don't use these charts. That's why. Where is that tool? Yeah, whatever. It doesn't matter. Does that make sense, David? So what I'd be looking for is a break lower here, and then it comes back up and bangs up against this with a signal candle right there. I know there's a possibility of drawing like just little lines, right? I've done it before. I have it on my other charts. I'm not sure exactly what's going on here. You draw so many more than me. Oh, well, that's good. If you're not drawing a lot, that's really good. I just drew. I just look. Let's talk about this. So we've had three touches. One, two, three in the last however many candles. In the last 33 candles, we've had three touches. Okay, and then before that, in like here, we've had one, two touches in 13 candles. So that's good. What you don't want to see is you don't want to see situations where almost every candle touches a level. Like you don't want to see that. It's going to take time for it to go from one side to the other, right? And if you can look, if you can get away with drawing daily levels and trading the 1 hour, that's going to be a really good way to trade because you will be sitting at this on the sideline until you get the very best bounces off the very best levels. Yeah, for sure. So my guess is that we will soon see the pound New Zealand break lower than this floor here. Doesn't have to happen right now, but I wouldn't be surprised if it did happen today because it's really been having a crack at it. Boing, 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 bam, boom, boom. Yeah, I wouldn't be surprised. If you check, and so if you can go to and Google IG markets, pound New Zealand, and what you'll see, actually we can do it. What you'll notice is that actually there are a whole pile of traders that are currently making, here, I'll show you. They are buying the pound New Zealand, which is a bad sign for the bulls. You go IG markets, G, there you go, right there. So I go here to the pound New Zealand, and look at this. We've got 81% of the client accounts are long. This is an extremely bearish situation. Look at just the daily. So when you see all these guys going long, that's a really bad sign. And it's highly likely that it's going to go lower. And I wouldn't be surprised if it does it soon. For sure. All right. Any other charts or any other questions? I'm happy to tackle them while we're here. See how on the pound CAD here, it took a long time from this touch all the way to that touch, which happens to be a big shadow. Not a very good one because on a big shadow, you want to see, on a bearish big shadow, you want to see the close down near the low. That was not the case here. Does have a higher high, does completely engulf the prior candle. It's the biggest candle we've seen since maybe this one or this one. But it didn't really close down near the low, so that was kind of a bad sign for that one. Do you have any examples of your last KISS trade setups? Yeah, sure. Let's see. Well, we can find one. Let's talk about, let's go to Aussie CAD, or no, let's go to Aussie. Let's go to Aussie. Let's go to Aussie and see if we can find on the 1 hour. Holy free holies. Let's go 4 hour. Okay. So this is an example right here. The box is going to look something like this. This is my box. All right. I've got my low touches. I got a false breakout here, which never gave me a signal candle, by the way. So that would not be a last kiss. I've got a bullish bias because, trust me, you can go ahead and Google IG markets and Aussie USD and you'll see most traders are actually selling right now. They're not buying. And so this would be an example of a last kiss. Now, let's talk about this. I would not, and I did not take this entry right here. This to me is scary. I want to see the market stay above the top of the box for a while. I don't want to see it just go and then come right back down. That's usually a false breakout. It's usually kind of like a blow off top or a blow off bottom. That's not a good sign. However, this could be. So the way that this would work, if you look at the line chart, actually, you'll see it looks like it's broken out. It kind of broken out and sort of bounced and then spent some time up here and it's come back down. However, we don't really know if this is going to be a bounce here. So that would mean that I would have to put my buy order above the high. So the high on this candle, 73.63. So 73.69 plus 2, so 71. So I put my buy stop right there. That's my little buy level, right? Like that. And then I put my little stop loss in the middle of the box. Okay, and where is the middle of the box? The middle of the box is right here. You can see lots of bends, boom, boom, bam, boom, bam, bam, around 72.85. Okay, 72.85, and if the market if I do get triggered and the market does take out my buy stop there, then and then it comes down and closes below my top of my box, which I'm drawing that box at right here at 73.34. If it closes down below 73.34, trade is over. If it collapses and hits my stop loss, trade is also over. But what ends up happening is I don't usually take a lot of full 1R losses. You get a lot of 0.3, 0.4, 0.25 losses, which is nice. So it doesn't look very good right now, but this 4-hour candle can completely change, right? Because let's see, we would have it at 9, and then yeah. So this is brand new candle. This is the first hour of this candle, so it still has 3 hours to go. It's going to look totally different than it does right now for sure. So this could still go and take out that buy stop up there. So that's an example of a last kiss. UB, Aussie yen and Aussie USF. I think that's USD, right? So I don't think the Aussie yen is as bullish as the Aussie US as the Aussie. So Aussie yen, I'll have a look. I don't think it's in a bullish situation though. Yeah, I have no idea what's going on with the Aussie yen actually. I would say that the Aussie looks very much more bullish. I don't think it's as bullish as the Aussie CAD or the Aussie Swiss, but I think the Aussie yen I think is neutral right now. And again, you can just look at the open position ratios and get a good idea. But to me, this looks like it could be a head and shoulders. I would be neutral on the Aussie yen. I'd have no idea, but I would be a buyer on the Aussie. I am a buyer on the Aussie CAD and a buyer, possibly a buyer on the Aussie and the Aussie Swiss as well. Cool. Thanks so much. This is really useful to see your live examples. I love your book. You might have guests. Oh, awesome. Yeah. Thanks, David. Thanks for the questions. It makes it better when you ask questions because other people often have the same questions and they don't say anything. So I understand. We're all introverts. That's why we're traders. Okay. Hey, thanks a lot, guys. Thank you, Vicky. Thanks, everyone there. I really appreciate your time. And thanks to those of you watching the recording. We'll catch you in another webinar. I wish you very happy trading. Have a good one. Thanks, guys. See ya. Bye.